Good morning, everybody. Welcome to today's flow show. We're going to have a special flow show today. Me and Kay are going to put our feet up, and we're just going to let you watch Bailey for the next hour. And if you're still awake by the end of it, you can someone switch the lights off on the way out, please? Morning, Kay.
Morning, mate. Morning, everybody.
How you doing? You all right?
Yeah, good. There's a completely new phenomenon in the market. I don't know if people have noticed it, but when Bailey speaks, sterling is actually going up. We've never seen that before.
It's historical. Historical.
Yeah,
take a picture.
This is a historical
Remember
thing.
where you were when the pound went up when Bailey spoke.
Exactly.
Historical event.
But as Mark said in the room, it's wait for it.
Yeah, early days yet.
There will be a line. There will be a line that sends it a big figure lower.
Exactly. What is he saying? That fires sentiment? He's saying absolutely nothing.
No.
The market's just moving around. Nothing that the bankers saying are influencing what's happening in the pound. This committee hearing is just to talk about the latest monetary policy report that came out with the BOE meeting last week. And basically what it's been so far this morning is Bailey making excuses as to why they got their forecast wrong over inflation and so on and so forth, and monetary policy. As I say, if you manage to stay awake through it, you're doing better than me. I'm glad I'm doing the show now because I can switch him off. But no, nothing so far coming out that is any way market moving. So don't worry about that. Right, let's get into some of the important things happening in markets other than the rubbish at the Bank of England. According to Bloomberg, a top Chinese economist sees a possible interest rate cut in the next quarter. That's a bit of a repeat to things we've already heard along those lines already. Over in Japan, we've had some more messing around in the yen over who's going to take the hot seat at the BOJ. First of all, yesterday we had one of the ruling party MPs, Amari, warning the BOJ against raising rates, saying that Japan's economy isn't in a position where the BOJ can exit ultra loose policy. This potentially falls into the next story, which is that the LDP party is said to be divided if Kishida seeks someone who's going to maybe pivot at the Bank of Japan. And Yamaguchi his name's dropped into the press again. He's one of the runners that we knew about in the race, but he's obviously seen as more hawkish. And so this story's come about that if Kishida goes for someone like Yamaguchi, it's going to create waves in markets, because markets are going to think that the Bank of Japan are going to end up ending their easing cycle much quicker, and they're worried about the market impacts from that. We know the rabbit hole that the Bank of Japan are in. One of their biggest tasks, should they ever decide to exit policy, is how to slow the oil tanker and then turn it around. It's going to be a huge job. They're not likely to go hammer and tong at it. It will be a well drawn out affair. It probably take maybe 5 years to even stop the oil tanker, but that's going to be a situation they need to manage, and some in the government are worried that depending on who Kishida appoints or the government appoints, that task will be made difficult if they're more hawkish. So that gave dollar yen a little bit of a flip around. Didn't really go anywhere major, and we came back to the middle, and now we're offered a bit more in dollar yen this morning. Okay, this is just part and parcel of what we're going to get, isn't it? Flipping from headline to headline.
Yeah, definitely. So somewhere the market is having a lot of questions now. Yamaguchi is, if you look at the Dove Hawks sheet, he's on the hawkish side, right? So having him in the frame is already keeping the market on its toes. And so we will see. We just had an NHK headline saying that the government expects to present the nominees to Parliament early next week. So that was already a little bit expected. But so early next week, I think the yen is going to be besides US CPI, of course, the focus of the week. If Mamma Mia gets it, so Mamma Mia, let's say, if Mamma Mia gets it, that should be weighing a little bit on the yen. But if Yamaguchi has a lot of votes, then it could put a bid under the yen, right? So it's going to be, let's say, a small binary event of who's going to get it. Let's not forget that Kishida said himself that he was mindful of possible market reactions, and as a prime minister, that's a bit of a statement. So, is there a hint there that it's Mamma Mia in the front seat? I'd say so. But let's say it's 60% Mamma Mia and then 40% whoever else, you know.
Yeah, exactly. And I think it's important to look at the possible market reaction. I mean, you know, Yamaguchi may be seen as a hawk, but we're not talking Bullard style hawkishness here.
No way.
Even he will be very constrained in how he puts across his hawkishness. You know, he's not going to come in and say, right, we're hiking rates next week. The yield curve's going out the window. It's going to be nothing like that. The market will move in that way, in a hawkish sense, but it's not going to be the same as other central banks turning hawkish.
Absolutely not.
And
Absolutely
on the
not.
other side,
we can never forget all those stimulus packages that the government has put in place. Amari is already out saying that be careful what you do, because they're probably shit scared that Bank of Japan would turn the ship around and all of a sudden starts to hike fiercely. But I think that risk is extremely limited. It is going to be a very slow affair, whatever happens in Japan. But that doesn't take away, as we've been saying before, that the Japanese whales may have to reshuffle their JGB portfolio a little bit, and bonds and how should I say, the equity markets as well. Keep a very close eye on what happens in the Nikkei and the topics also next week, because they are going to be drivers as well of for what's happening in the yen.
Yeah, so I think the risk is if we get someone like Yamaguchi who's seen as more hawkish, you're going to see yen pairs crumble. But then it's going to be important his first words or whoever's first words come out, because if they are not as hawkish as the market wants, you're going to see that turn around and yen pairs running higher. Conversely, if we do get someone who's seen as Kuroda Mark II, you're going to see yen pairs rising. But again, we know that there's evidence building that the BOJ are going to have to change policy soon. We've seen the wages data and we've got more to come. So if you do get a reaction to the upside, again, I think the market will then switch to looking at the data. They'll see a Kuroda Mark II governor in play, but they'll be looking at the data. And if the data still confirms that inflation's going up and wages are going up, then traders are going to start pushing the tightening trade again, and we'll likely see yen pairs coming down. So I think there's going to be great opportunities to trade either side of this. One, a hawkish reaction, dollar yen down, then that may be a dip to buy once the market's settled a bit. And on the other side, if it's a dovish member, dollar yen ramps higher. If the data continues, that's a short to perhaps get into. So I think we're going to get some nice trades over this, but you need to know the potential reactions at all these stages. And it seems one stage is coming next week, and it's going to be very interesting, in my opinion. Right. Keeping in Asia, and our mate, little fat boy, Kim Jong-un, is having one of his toy parades overnight, parading some intercontinental ballistic missiles, the biggest parade of such kind they've done for a while. So he's saber rattling again. Wouldn't be surprised if we start getting more tests of missiles kicking off there. I did read a story that they're working on solid fuel missiles now, which are easier to launch or something than liquid fuel. So keep an eye out for them lobbing some missiles over Japan's airspace and that sort of things. They do further tests. It's not going too well in terms of US-China relations as well. Apparently, the Chinese Defense Ministry wanted a call with their US counterparts, and that was or rather the US wanted to call, and China declined because they say it's not the right atmosphere to conduct such talks. This is after their single balloon, spy balloon, apparently flew over the US, and since then apparently there's been about 4 or 5 other single spy balloons floating around, let off the leash by China. So no idea what's going on, but relations are taking a little bit of a hit at the moment. You may remember Blinken was supposed to go out to China last Sunday, and that got knocked back over the balloon stuff. Yellen is due at some point to head out there. We'll see whether that happens or not. But just when we thought relations may have been picking up, they seem to have taken a step back. Coming over to Europe, and the Riksbank hiked rates 50 BPs as expected, takes their rate to 3%. They will probably be raised further in the spring, and they will begin selling government bonds to reduce the balance sheet. Kay, I know you were watching this one, a bit of a more hawkish slant from the Riksbank.
Very hawkish compared to what Riksbank has been doing so far. This is a hawkish one, and the market reacted on it, right? Euro stock is 1.5% lower.
Yeah, still reacting.
Dollar, yeah, it's still growing, right? Dollar stock is 2% lower, also thanks to a bit of a lower dollar elsewhere, and it even drags the NOK with it. Although I see oil and gas a bit higher, so that's another push in NOK's back. But yeah, I mean, it's a hawkish report. They have already been saying past weeks or so that the Swedish krona was a bit weak. Euro stock has been ramping higher since November. If you look at that, we've done like 15% or so, which is hell of a move. I haven't been trading it, but I'm going to be getting interested if we get a reaction perhaps higher again. I'm not sure whether it's dollar or euro, so that's going to be the play, but at least the market's got the message there, and that is already worth noting, because so far they have shrugged off all those comments from the Riksbank. But we have to know that Riksbank has been one of the more dovish central banks in the whole hiking cycle. Hiking, yes, but then they were slow on their bond sales and everything. So yeah, this is a bit of a turnaround, and yeah, the market reacted to it. Positions have to be managed there, it seems.
Yeah, definitely. Germany finally managed to get their delayed CPI report out, and a bit of a surprise, and not a surprise. The Eurozone measure, the HICP, came in at 9.2% versus 10% expected. So it was expected to come in higher than the prior 9.6%, so it came in lower than both. But the CPI number came in higher than last month's 8.6%. It came in at 8.7%, but lower than expectations at 8.9%. So it's gone up in one and gone down in another. So still a bit messy. Overall, still running at very high levels, 8-9%. You know, inflation may be coming down, but it's not quite rocketing down yet, particularly in Germany. And to that end, ECB's De Guindos was out yesterday saying a wage price spiral must be avoided. Now, he did say markets may be too optimistic about the inflation trend in terms of inflation coming down. He wouldn't exclude further rate hikes after March. But then we got ECB's not coming out saying that inflation appears to have peaked. So De Guindos is saying the market may be getting too optimistic, not saying inflation appears to have peaked.
Is it? Are they as lost as anyone else? Because nothing
yeah, of course they are. Always
De Guindos is a dove. they're switching the tables around. What's happening?
Exactly. None of them know what they're talking about, but they're going to come out 30 times a day to make sure your average punter does. And I mean, that is the point, that we get so many central bankers out speaking. They got such a credibility knock over the last couple of years. You know, this is almost like mind conditioning, the way they come out with all these comments. So you can be under no illusion what they're going to be doing to try and get back that credibility. Further from ECB's not, it did say it will take some time before core inflation slows down, and likely it is that core inflation becomes higher than headline inflation. ECB's Kazakh says there's no reason to pause or stop hikes after March. He's one of the bigger hawks at the ECB, and that rate hikes must hit significantly restrictive levels. Ivana's just asking, are they changing the method of calculation? Talk about the German CPI. They had some issues with data collection. I don't think they've changed the method, but they were getting some wonky numbers on their whatever methods they used, so they had to stop and hit Control Alt Delete or whatever and get the machine working again to get the numbers out. I don't think it's a calculation difference, but I could be wrong. Coming into one of the other pieces of data, yesterday's MBA mortgage applications came in at up 7.4% versus a prior 9%. Keeping an eye on this one because it's been positive every week this year so far, bar last week. Last year, you could probably count the number of positive days applications were up on one hand. This year, as we start, it's going the other way. Things are picking up a bit now in those mortgage applications, which can tend to mean, if we get a bit of a trend there, that perhaps we've seen a bit of a bottom in housing market. But according to some of the Fed members, that may not be the case. We had Kashgari out yesterday, I think it was, saying that there's signs that the housing market is picking up again. Well, Fed's Williams was out yesterday saying that the housing sector is seeing a definite slowdown. So again, two central bankers speaking two different directions. He still sees a peak rate of 5 to 5.25% as a reasonable view. The Fed's likely now closer to the peak and can take smaller steps, and 25 pip hikes seem the best option for now. If the situation changes, the Fed can move faster than 25 pip moves. Fed's Cook out also, it's important not to take too much signal from two or three data points in times of uncertainty. She also thinks it's currently appropriate to move in smaller steps as we assess the cumulative impact of hikes so far. Combination of a strong labour market, moderating wages and prices raised hopes for a soft landing. Kashkari was out again overnight, saying that most of his colleagues see rates rising above 5%, and certainly possible it will go higher. Walla also out. More work needs to be done. Inflation remains quite elevated. May need rates higher for longer than some expect, and they are ready for a longer fight to curb inflation. Now, on these rate expectations, apparently some traders are starting to position for a higher Fed rate, maybe going up to some 6%. Bloomberg reported that on Tuesday, a trader took a large options position that would make roughly 135 million if the Fed keeps tightening until September, and that they were buying the same structure on Wednesday, and other bets, similar bets, were expressed along those lines in different ways. Now they took the preliminary open interest data from the CME for these trades placed, and it was an $18 million trade placed Tuesday in the SOFR, that's the finance rates options, which are set to expire in September, and they are targeting a 6% Fed rate or benchmark rate. Now they've done some calculations, and they say that the trade would break even if the policy rate hits around 5.6%, make 60 million if the Fed raises to 5.8%, and then that 135 million if it gets up to 6%. So there are some in the market who are placing bets that Fed rates go higher. Now, obviously, that's a good risk reward, 18 million to make potential 135. It's in options, so, risk is managed. What do you think of that, Kay? Do you think it's a bit of a punt, or are more people going to think along those lines?
You know, people will always take puns on the one side or the other side of markets, right? But you know, I'm not completely disagreeing with it, because the Fed has received signals that through the labor market and the PMIs that things are holding up. So, but for the time being, I view it as a punt. I think most of the Fed members are looking at a terminal 5.25, and then see what happens. Now, do they have to go further? That'll depend on how inflation pans out, right? And if the rest of the data, as the labor, such as the labor market or PMIs, are holding up, yeah, why not? They could push it an extra 0.5% or so. The main message for me, or the main take for me, to put it that way, I think they are going to stay high for longer, and then the market really thinks right now, and that I'm not sure where we are going to end up. For me, base case is still somewhere around 5.5%, and then we'll see. You know.
Yeah.
But the thing is, I still recall those words from Powell saying that they want the whole curve to be in positive territory, the yields or the real rates to be in positive territories, and we're far from it if you look at the longer end of the curve. So they may continue to hike, you know, and also seeing those weakening financial conditions softening.
Well, I guess they also gambling a bit on inflation coming back down to, you know, artificially get the curve up, you know, rather than policy going up to meet inflation come down to meet policy. You know, it's obviously part and parcel of it. But yeah, for trading wise, you know, this is potentially a one-off bet, a bit of a punt, as you say. You know, if you've got 18 million to punt around with, nice to have it. It's only if we start to get the wider market thinking the same thing that we're going to see the dollar, you know, strengthening again, perhaps yields creeping back up. At the moment, you know, they've taken Powell's words. We look at the 2 years as a bit of a gauge. And, you know, it was looking a bit soggy underneath, heading towards 4%. And now we're, you know, back up to the 4.5% mark. You know, even the 1 year, which is, you know, a good gauge for this year, getting back up towards that 5% mark, you know, the highest it's been, you know, since late last year. So the market is taking note of what the Fed are saying, and it's seeing the data, and it's leaning more towards the hawkish side. So if we get more trades along these lines, more people actually, you know, putting their money into the fact the Fed go higher, we could, you know, be seeing a little bit of a turn in those pivot folks who have been pushing since the latter part of last year and early part of this year. They may be getting more of a bloody nose as we move on. Right, last couple of bits of news items. There was a piece out overnight about ocean freight shipments from Asia to the US. They declined sharply late last year. They're pointing towards stubbornly high inflation that has put the squeeze on American families on furniture and toys. But I also say that retailers are no longer stocking up inventories, which was obviously a big factor last year when we had all the, you know, the shipping blockages and everything like that, people wanting to refill inventories. And as we mentioned then, when you filled up your inventories, when you filled up your stores, you can see activity drop because you're not putting in as many orders because it's all sitting in your warehouses. One thing they don't really pick up in this story is that because of the COVID situation in China, and because all those ports got shut down, and with these tensions going on with China, a lot of American firms looked for other supply lines to move away from the influence of China, not reliant so much on China. So that also could be why trade has dropped between the US and China and other countries as well. I suspect maybe it's also part of why China wants to seem a bit more friendly to everyone, because if everyone's shopping elsewhere, that's not going to be good for China's economy, which is obviously heavily export related. It just gives an idea of how trade flows around the world, and that can influence economic policy and it can influence monetary policy if you know how those flows are going. As mentioned at the start, China may be looking to ease rates over there to get their economy going. They'll need a more domestic-led economy if their international economy is suffering. What do you make of it, Kay? I mean, it's when we talk about fundamentals, there is a big, huge global picture, and sometimes those flows, they influence how markets move, obviously.
Yeah, they do. But I find the situation very unclear, to be honest. Yeah, I really don't know. Especially with China, they're trying to play on every side of the game, supporting Russia, then other things, trying to undermine the US and the West as well. But I don't know. I mean, I think the market is ready to flow back into China, but an accident could quickly happen and reverse it if they really go too hard on the West, because they need those flows, they need those investment flows, right?
Well, that's big. I think that becomes the question. Are they willing to sacrifice their economy to go against the West on something like Ukraine and all the other Western influences they don't like so much, because they obviously become such a big part of the global economy. It'd be like shooting themselves in the foot, wouldn't it, if they went too far?
Yes, and I think that's why they are trying to play it both sides. If you look at some of the comments, to me that's a very unclear situation right here and now. Very, very unclear.
Yeah. Right, last thing on the list. The BOC raised rates in January because of labour market tightness and stronger than expected Q3 GDP last year. They did debate whether to leave the rate unchanged on the grounds that it was starting to work and they just needed more time. That was in the BOC deliberations, or the minutes that got released yesterday. So they might have actually not hiked at their last meeting, which would have taken the market by shock a bit there, but they're still in pause mode, and they seem to be happy with rates at the moment. Again, not talking about rate cuts anytime soon. And that's it, all I have on the headline front. Don't know if you've got anything you want to chuck in, Kay?
No, mate, you've covered everything.
Anyway. Good.
I'm a little, yeah. I've just on this Bank of Canada. I've spoken about it briefly in the room this morning. I find them preparing. I don't know if they want to prepare the market, but they're erring on the dovish side rather, right? So I've had this position running in EuroCat, which has been doing fine, and I will show the picture later. I've been buying some back on it yesterday, and I was planning to sell again exactly where we are now, around 144.40, because that's a level. But I'm going to hold back from it because of these Bank of Canada comments. They are a little bit troublesome to be long Canada in size, to me at least. Yeah,
and I haven't looked at what's oil doing this morning, because that's still remaining.
Yeah, oil is a little bit better bit.
Yeah,
the day itself it's not really moving that much, but it's at least higher than what we've seen lately.
Yeah, that's obviously a bit of a boom for CAD at the moment, but it seems to be going the other way. So yeah, time for a bit of caution maybe on the CAD stuff. Overall, we're getting a little bit of dollar weakness creeping in again, as we saw earlier. Dollar yen creeping down. I thought we were going to be moving up again yesterday, but it's done another 180. I think, again, this is part and parcel where we're at the moment, swinging between the data, swinging between the headlines over the Bank of Japan. It's two-way risk in this pair from what happens in the US and what happens in Japan. For now, we're just back in that 130 mode. Maybe we're going to look down towards the 129 area. I don't know. It's it's not really looking like it wants to go anywhere at the moment. So we might be seeing a bit more consolidation here. As mentioned, cable on the up. No idea why. Don't ask me. Cable does what cable does.
All dollars are a bit weaker. I think it's
it's generally looking a bit, you know, dollarish rather than anything else. I try with cable. It's a bit hard to have, you know, find levels every 10-20 pips because it just moves through them. So I tend to look at the bigger areas. So, you know, I don't really have a lot till maybe we get up to the high 121s. Big figures are going to come into play. That 120 to 60 area up there, 60, 70 is probably the next one to look at. And above there, then maybe we get to look at the highs again. But I'm still in the dead cat bounce camp here at the moment for this move from 120. It's not going to take a lot, I don't think, to see this plummeting back down again. A bit of good data. We've got jobless claims today. If that is a strong number as well, as we've been seeing so far this year, pretty much every week, that's going to play into the jobs situation that we've had following NFP, and we could see the dollar gaining on that. So I wouldn't be surprised. One headline, bit of news, data that's good for the US, and we're back down testing 120 again. Aussie dollar still working out what it wants to do up here near 70. Does it want to go up? Does it want to go down again? Again, looking a bit balanced here, but it needs to get above this 70 level. If we go a few more sessions when we don't, then that's maybe when we see a steeper pullback, maybe down to these lows again, maybe even more. Euro sterling, it's looking weaker yet again, creeping down now after a move off those highs. We're in a bit of a zone here, the 88, 60, 80 zone. We've been here many times before. You know, could be a bit of a pivot area as to what we do next. You know, this was a previous highs, and we sat through here the latter part of the year before, you know, a couple of little fake outs before we then got the break. Then it became support. It's support here and now. Again, a move under, and maybe we're going to see 80, you know, low 88s, maybe down to 80 into the 87s again, and the next support area. You were looking at this one, mate. Are you getting a twitch yet, or are you going to wait to see if it gets a bit lower?
I'm trying to be very, very patient with this one. Yeah, as you know, I mean, I have my option, right? So for me, nothing has to be done for as long as it's fast enough. So no, to me the most important thing now is that it moves. But I am looking at the underside of the 88 zone to perhaps add some long cash again to it. If anywhere we're getting between let's say that 88 and a quarter that you're showing and that 87.90 or so, that's going to be an area of interest for me, at least in euro sterling in cash, and I will completely unhedge my hedges in that option. I had to hedge a lot on that spike just to take profits on the option, and now I'm relatively evenly long and short, just a tad more short than long still, because I thought there was a fair chance to go and have a look at these low 88s. But if it holds here, I might already start to unhedge more and just go 50-50 and see what happens. But I will be interested to reload if we get a retest of those low 88s.
Yeah, I think I might be with you on that. Still got a little pinch on. Still got my bit from the 86s. So yeah, I'm looking again. If we get dips to load up again, it's a nice range play if you've got the patience sometimes to pick your levels. So keep an eye on that one. Not much else for me going on. My dollar Hong Kong is right slap bang on the band. So probably in for a period of this type of action where I'm sitting picking my nose for quite a while for something to happen. I fully expect that unless we get some news that sends it lower. So I'm just going to sit on that position for a while. My dollar China, another one. Again, it's not doing an awful lot. every time it was up in 79, I was thinking, shall I just get out? Shall I just get out? And I think, no, I'll leave it for a bit. I think it's one of those ones where it's not a trade I'm comfortable being in, but I'm going to be stubborn and wait till I get knocked out on the stop. Even though I know probably full well it's going to happen, rather than get out now, I'm going to leave it to the stop. We shall see if they cut rates over the weekend. Then I might be a happier bunny come Monday.
Are you long?
Kay, do you want to take go on, mate?
Are you long to China?
Yeah, I'm still long on that buy stop 680.50.
Okay.
So yeah, I don't like it. I don't like it. It was
because if they talk about rate cuts in the second quarter, that's still like a month and a half to go.
Yeah,
I don't know. I'm trying to be very patient on that one. I may even wait until the former spike is taken out, 684 or so. But I still think I'm going to be interested. Give me another move lower down below 670, then I may load the purse up.
Yeah, that's where I prefer to be long, but I didn't bother when we got down there because I wasn't liking the PA at the time. But such is life. Such is life. Do you want to grab hold of the rudder?
Yeah. Yes.
And while you do that, question for Mike. He said that is there short covering on GBP on the pound? My question to you, Mike, is why when a price goes up, it's always short covering, but when a price goes down, it's never long covering. The market's always fixed that when something goes up, it's shorts getting battered, but when it goes down, it's not longs getting battered. So answer me that question, Mike, if you will. Kate, all yours, mate.
Yeah, I think we have to look at it here. The top end of my screen there, those US yields, the 10s is back sub 360, and the dollar is lower. Is lower against basically everything, right? If you look at the euro here, we did that low on Tuesday, and since then it's trying to recover, and the yield differentials are doing exactly the same. It's all about the correlation algos, in my opinion, until we see the CPI on next week. And my chart may not be completely up to date, but look at what the stocks are doing. They're going higher today, and the dollar is lower. It's just correlation algos driving the bus for now. I don't see anything really anything else, and not even anything else to do right now than trade the correlations if you want. But let's look at it, because there's a couple of interesting levels, right? On the euro dollar and the cable, and a couple of crosses. There's a couple of interesting things. So the euro dollar, we're back into this zone. Stretch it to 107.80 if you like, but it's that support that we had the other days that is now becoming a bit of resistance. And as I say, the US yields are coming off, so euro's getting a little bit of a lift. Is it? Are we going to keep the break? I don't know. I'm looking at it because I'm still a dollar dip buyer for now, because I think the market needs to reprice those yields and rates perhaps a bit more. But then we'll have to keep an eye on what's happening this afternoon in the States. If we need to hold those levels here, 356, 358 on the 10s should be a level that we hold. Otherwise, the dollar could even see more weakness. By the way, I'm re-entering the cable that I cut before. I'm just doing it live here because I can't update everything at the same time. So the euro dollar, yeah, here, and the next resistance is around 108 figure 5. Then you add a little bit of 108 and a quarter. Can it go further? It will all depend on those yields, but I don't think so. So I'm looking for perhaps doing a little bit of a counter trade here very soon. I might actually get tempted right here, and then for a small one, yeah, I'm just selling a small one here. And then, yeah, so to me, we are going to range. That's what I've already said yesterday on F.A.C.E as well, and perhaps on the Flow Show as well. I think we are going to range until the CPIs. Cable, keep an eye on that one. I think we just did a bit of a stop run on the cable here through 50. People playing that zone, me included, stopping a little bit out. I've resold it. Let's see what happens. I'm going to give it just the run of the day.
Okay, let me just quickly, Temrero speaking at this thing, she's just said, where I see myself now, I would consider a rate cut, but can't say at which meeting I would vote for this. She is one of the most dovish, but she's talking about voting for a rate cut, and they haven't even finished hiking yet.
Man. Okay. So yeah, it's on the day. It's above or below here. Oh, okay. So perhaps that's the 15 points back down cable. Perhaps I should reassess then. Anyway, the level is here. If we get through it, can't rule out a run into 122 or 515. A bigger zone is going to be, of course, those mid 122s. If ever it gets up there, I think that should be more than enough ahead of the CPIs. Oh, and tomorrow, big day for the sterling watchers. 7 a.m. GMT, we are going to have the fourth quarter GDP. We're going to have the manufacturing production. We're going to have the trade balance. We are going to have a bit of construction output, business sentiment, you name it. It's tomorrow. Sterling should be on the move. Okay, so whatever you do today, don't put all your risk into one position. Keep ample room to roam into tomorrow morning, right? So bear that in mind. So whatever happens today can be undone or multiplied tomorrow. So that's for the cable. If we start to cap here, there's probably room for a little setback down to the 120 and 3/4 zone. If it gets back down there with my small short, I'll be a happy take profiter and just wait for tomorrow's data. Yeah, then this euro sterling. This is what I'm really looking at. Those lows 88s. If we get down there, I'll have unhedged my option there, and then see if I need to add really cash. My option is still running until the 24th, so if we see a dip not too far from there, I'll unhedge it, and then if it goes back up, I still have my option. But I'd like to add some cash perhaps there as well. For the rest, yeah, dollar yen, I'm really not tempted by much in the dollar yen right now. It's really moving around with those expectations, with the US 10s, and I can't see. I really can't see anything for me personally to do anyway. But we had an interesting discussion in the room yesterday about euro yen, and we have to go a little bit to the larger picture, because this still seems that we are in an uptrend with intermediate stations, but it looks that we are in an uptrend. And if you add the weekly cloud, if we get a really big setback on any of the nominees or so, I'm going to have a look at this, because we were talking about this yesterday, and perhaps wait for a last big flush out in yen pairs and then start to load them up. So, and this is also the 50% of the whole move in 2022. So if ever, and it's far away from where we are now, but if ever we get a move down into the 136s, I might not hold back any longer and load up the boat in euro yen. And then if we come closer to home, you can see that it's been capped in the last from December. Really, it's been capped on any retest of the cloud, whether we be inside or the bottom. It's been capped by that. So that is another one that I'm looking at in the shorter term. If we can get back into this, perhaps we are going to have this run up to this 142 80 zone, which is a pretty important zone in my opinion. So that for the euro yen, I'm kind of preparing what I could do in this, but I'm relatively interested, and relatively interested also because I think that Bank of Japan is not going to be as fast as any other central bank. They will be taking into account that the government needs to finance all those stimulus packages. So I think that sooner or later we will find a top in yen somewhere down the road. So perhaps not immediate trades, but just trying to prepare the terrain a little bit over there. Quick look at the metals. Gold is moving along this trend line quite nicely. So that's for the short-term traders want to have to observe, I reckon. So the underside now is around 1870, 72, and the top side, yeah, 1900 is going to be the level to watch, of course, on gold. It's probably going to be driven by what's happening in the US yields as well. Silver is stabilizing. But as I said yesterday, it's respecting the low 22. So why wouldn't we if it does? So that's going to be your area that you have to watch here. Top side, I think range until it breaks back above 22.90, 23.10. Nothing much to say there. Yeah, and then we've seen this move on the stocky. It's yesterday I was looking at that, and we've broken above this channel wedge, and then violently came back into it. And today we are like 1.5% lower. Could be that we are on our way to low 11s. Why not? 11. It's around 11 the support, and it's also a FIP around there. So keep that in mind. Already have a look at what's happening around the 110708 zone, but it could be that we are on our way to 11 here if the market needs to adjust more. So that for that. Noki is helped by oils holding up and gas holding up a little bit. As I said the other day, I've stopped being long, and now I'm waiting to see if we can retest this zone. Well, here we are. We're not too far from it. 1086.87 with a 1083 below there. Keep an eye on what's happening here. If perhaps we get a bit of a stop run below and then stop and start to move higher again, the move may be over. I'm not saying it is, but the move may be, the correction may be over. So keep a close eye on that one, I would say. Dollar Noki, pretty much same kind of scenario, of course, with the dollar being on the defensive. People may be calling this a head and shoulder, I don't know. But we also, as I was saying, why not have a look back in the low 10s? Look at this, 1001, 1005, 1008. This is where we could be heading to, and then reassess. Yeah, let me show that Euro Canada. So this is the Euro Canada. If this is double, triple top, we should stop here, and we stopped right there. We are still not far away. We stopped right there again, 144.40. This is the level of the day, I'd say. If we cap here, nothing changes, and we could still be on our way to low 142s, but keep in mind, though, I mean, I'm respecting what the Bank of Canada says. I'm just keeping that tiny open to respect the level, and I've been short on the way down, so there's no risk in my position. But if it goes back above 144.5, I'll be out of there. I don't really like what the Bank of Canada is saying right now, so I'm respect the levels, but I'm not a big fan of Canada right here and now. Aussie Kiwi. Speaking about the level that I pointed out and haven't taken the position. I showed this right where we were there yesterday, and I said, okay, this may be enough in the Aussie Kiwi, and look where we are. We are like 60, 70, 80 points lower. So now we're looking at the other side again already. I think 109, 20, 25. 2030, and then of course the waterweight 75-85 zone is going to be important again. But it might be enough already around here, and then we are going for a retest up on the upper side later. But it's doing nice things for those who want to pure trade a few patterns, a few lines, a few levels. It's doing pretty nice things, this Aussie Kiwi. So if you're interested, keep an eye on them. And do I have anything else? No, you covered already the Aussie. As you say, it's a 70 zone, right? I think I'm going to leave it there. Ryan?
Yeah, no worries, mate. I'm just, yeah, I'm out. I'm just actually going to stick on a bit more dollar Hong Kong up here at 97.
I'm going to update the trade room as well.
Yeah, I'll chuck that in a minute. Yeah, I'm just gonna do my usual with that Hong Kong. Stick them on, look to offload it. Where is it? Where's the bloody chart gone? Lost it. I deleted it. There it is. Yeah, I'm just gonna do my usual. Stick a bit on up here, and if we get dips down to 84.50, 84, I'm gonna knock it out. Reload on the thing. Just do a bit of rinse and repeat cycle with that if that happens. So yeah, just added a bit on there as we were speaking. I've not got. There's not a lot of data out today. There's nothing much out today. Got Mexican inflation for those who are like looking at the MEX.
Yeah.
Inflation is expected to rise a touch to 7.89% from 7.82 prior. In the core, rise to 8.41% versus 8.35% prior. So keep an eye on that one if it's a bit of a gangbusters number. The only other stuff we got is initial jobless claims. It's always quiet the week after the NFP. Has Bailey finished talking yet? I don't know. I don't want to go back to that. Please don't make me go back to that.
I'm very uninterested.
Yeah. In that case, we'll call it a day. Stell's going to be jumping on a plane back to Greece, which is apparently under tons of snow at the moment. So no sympathy from us lot here. He moans about our weather. He had it pretty good while he was over here, didn't he? So he's going to go back and get his shovel out. We shall see him probably tomorrow. Obviously, K-Man tomorrow, and you'll see me tomorrow. And we hope to see you tomorrow. Thank you very much for coming to the Flow Show. Cheers, Kay. Cheers, guys.
Thank you. Thank you, guys.